Hello and welcome back to Coinscrum Markets. I'm thrilled to be joined again today by Rupertus Rothenhaeuser, CEO of Brokerage at Crypto Finance Group in Switzerland. How are you doing, Rupertus?
I'm very well, thanks, Paul. Thanks for asking.
Good to see you back. So let's dive straight in. Just looking over the last week or so in the markets in general. We came off from the all-time high in Bitcoin. Everything else kind of pulled back a little bit with it. What's your thoughts on that? Where we're at in the cycle now?
I think, Paul, we've seen exactly what was predicted by many. We have experienced, especially based on our clients' flows in the platform, a lot of limits were set right in or about the regions where the all-time high hit. And suddenly a lot of take profit limit orders in the system were triggered. And guess what? The market never printed a new high. So from that respect, it seems a couple of guys read the market pretty well, especially in Ether. The Ether 2000 level was like a bang on hit, and it was triggered coincidentally enough at right about 1 a.m. in the morning at Zurich time. So not only that it has moved the market since then, it showed us as well that our 24/7 trading system works perfect, because otherwise at 1 a.m. in the morning it's pretty difficult to trade if nobody realizes that the orders and the limits get triggered.
Yep, we've all been there, woken up in the morning and missed the opportunity of a lifetime. How are your clients looking at this? Because I know over the years people have kind of bemoaned, are there fundamentals to kind of follow? Is it just technical analysis? Is it gut feeling? What do you think they're looking at?
It is extraordinarily difficult to measure because we deal with B2B clients. I do not see the ultimate beneficial owner. I don't know, is it mass retail? Is it ultra high net worth individuals? Is it private banking clients behind it? One thing is for sure, Paul, we do see by the day a growth in our customer base. We are onboarding between 6, 8, 10 new clients per day. I know that is different from the 10,000 on retail platforms, but we have substantial customers, B2B clients, financial institutions, which are more cumbersome to onboard. They have more requirements in terms of compliance, KYC, AML procedures, but once they're onboarded, they are pretty active as well. So our clients more and more get the need from their clients in order to do something. We hear so often that clients come to us and say, we had no other idea, we needed to do it. Either because our clients ask us within the private banking and wealth management space, how can I access the space? What can I do? Can I trade through us? Or I can't, do I need to look for a new bank? No, quiet down, relax, we'll make it happen. So that's one thing, the client's demand is increasing. Institutional investors as strategic asset allocation in the crypto space is growing. And finally, the real retail is playing an extraordinarily dominant role in this platforms game. Because if you look around the planet, how many crypto trading platforms and exchanges are suddenly popping out of the nothing? There are millions of investors interested in participating in this new asset class. So I'm completely convinced this is not going to go away anymore. It might wreck. We might enter even in another crypto winter one day. Maybe never. Maybe it just sits here around the 50,000 level in BTC, and it's taking the next breath for the next run. We do not have any negative arguments why it shouldn't go on. And lastly, what drives us as well is in our environment, we are one of the few regulated entities out of and this is with all respect to the other countries, but out of let's call it the first world regulatory umbrella, which means a lot of banks, it's already a large step for them to enter into the crypto space at all. But if they do so, they do not want to move their funds to the Seychelles, to Panama, to Malta, to Cyprus, to Lithuania, or anywhere else. They want to stay in the EU zone, they want to stay in the US, they want to stay in Singapore, they want to stay in Switzerland. So this is for us an extraordinary opportunity in growing our business, and they are entitled mandatory only to deal with regulated parties. So we have banks lined up waiting for us until we were lifting the certificate from FINMA saying, guys, we are regulated now. You can go ahead, tick the box. We are a regulated counterparty. And suddenly they switch the button and go. And so suddenly they trade, which is very encouraging.
Mm-hmm. And in terms of their typical behavior, I guess, they're coming in, they're testing the market, they're making allocations. But as the market in general becomes more sophisticated, continued growth in the futures market, both unregulated and regulated, CME continuing to hit new all-time highs in terms of open interest and volumes. What are you seeing there? I mean, the basis trade on CME has been quite a popular one over the past year. Where's that at the moment? What's the opportunity? And are your clients typically looking at things like that as well?
That is a good question, Paul, and it confirms what I've just said. We are in a phase where volatility, which was, I would even say, unnatural high, right? I mean, it is not very healthy if an asset class doubles in value every 4 weeks. That is something very strange going on. So now we are in, let's say in BTC, for example, we are moving around between $45,000 and $52,000. And this is 100% reflected in the basis rate because the premium in the basis rate has come down, which means there's lesser demand in the derivative space from the high-end market makers and institutional players who are connected to CME futures. So you can imagine the more demand is, the wider the basis gets, and the lesser demand gets, the smaller the basis gets. Mm-hmm. So the reduction in the future spot base is reflecting exactly what we see in the market. There is a kind of consolidation on very high level.
Yeah. Well, I guess another area looking at where premiums have come down. There's been a lot of movement and activity, especially in Europe, around ETPs over the last year. We've seen continued movement in Europe, as I said, with new entrants in the market or existing entrants. Coinshares launched a dedicated ETH ETP product. Last year we had ITR Capitals list their products on Xetra. We've got a company called Valor entering the market now with a highly experienced team. And even 21 Shares based in Switzerland, I believe, have launched a Polkadot ETP now. So, that was going to be my question, I guess. Well, two things really. I mean, we'll come back to it maybe about your typical, again, these new clients coming in that you're seeing, how far down the kind of top 1,000 list are they going?
Yeah.
But interesting that something like Polkadot, that the 21 Shares guys saw demand in that already to warrant issuing that ETP. And then the other thing to look at, I think, is the Grayscale fund was up until very recently really one of the, especially in the US, one of the only and easiest ways for regulated firms to get exposure to the market, and we saw consistently seen very large premium in that vehicle over the last years, and that's now come right down. It actually traded at a discount last week. And do you think this is tied in with all these new ETFs and ETPs coming in, bringing the cost down and streamlining access?
Absolutely spot on, Paul. This is exactly what's happening. I have been looking at 21 Shares since day one. I admire what Hani has built with the team at 21 Shares. This is very encouraging. And again, it was created out of Switzerland because the regulatory umbrella is clean. It was the first ETPs of 21 Shares were listed on the Swiss exchange because they allow ETPs on crypto underlyings. In the meanwhile, they were able to list the products as well in Stuttgart, in Frankfurt, in Stockholm, and in many other markets. And it proves again the concept. A lot of banks do not want to get engaged with blockchain, wallets, key management. What happens if I lose my key? Is my crypto gone? Mm-hmm. So a lot of users, clients, investors, but as well the distributors, the banks, the regional banks, private banks, they love to use what they have, which is 100 years experience in securities trading platforms. STP, market making, trading, execution, settlement, all automatic, no interference, no key, no wallet needed. It works. So everybody who's not, let's put it, say, modern or open-minded enough to open a wallet, play directly with the underlying, using the alternative route via an ETP, ETC, can extraordinary benefit from the price performance of the underlying. Mm-hmm. And of course, the first ones were margin rich, I would say. And due to the fact that more and more players come in, issues of structured products, ETPs, ETCs, ETFs coming in the game, mm-hmm. actively managed funds, it all boils down into a margin compression. It all gets more commoditized. And guess what? It serviced the industry a good deal, because everybody who wants to be in the crypto space but not wants to deal with wallets and keys can go via the product route, and it's fascinating to see what's going on. In Zurich, I've just checked it, we have about 40 ETPs, ETCs listed on Six Exchange. On top comes a lot of leverage stuff from Fontobel and Leontech in the Zurich listing. Equal amounts of products listed in Stuttgart in Germany and Frankfurt. It is an extraordinary good, as it's a derivative of the classic underlying, and people can enjoy beautiful returns participating. And you can do small numbers. I mean, not everybody can invest in $50,000 BTCs. Okay, you have 16 decimals if you like, but people want to invest maybe just 1,000 euros via my own classical retail brokerage account, which I can do in a security, which I cannot do in Bitcoin. So mm-hmm. that's why these products are flying high. And as you said, Grayscale, the new ETF in Canada, I mean, it only takes time. I mean, if I remember right, the first trading day of the new ETF in Canada, I think they executed $500 million.
Yep.
One day. Yep. ETF, secure, regulated, prospectus, bulletproofed, known by the investor, goes through the roof.
Yeah, I mean, I guess that's the big one that everyone's been waiting for, is a US listed ETF, and the SEC have pushed back consistently over the last at least 4 or 5 years now. Every application, lots of applications gone in, lots of lawyers earning money. I know in one of the recent ones, again, VanEck have kind of filed an application again for an ETF, and this time with State Street potentially acting as custodian. So, I mean, if we look at some of the, we've seen the big treasury trades going through from, your MicroStrategies and Tesla, etc. They're executing $1.5 billion trades. I mean, might be, executed over a number of days or weeks even, but the argument that the market's not liquided there, or there's not, secure enough or trustworthy enough custody, there's not enough liquidity in the market. I mean, those arguments don't stand up anymore, do they?
I don't see the reason why it's so complicated to approve such a product. I mean, there is nothing wrong. It doesn't hurt, and if it's the investor's demand, why not? But what's wrong with it? What I do really not understand, Paul, is one simple thing. On the one side, the American regulator body are happy with providing the only reputable futures exchange, CME options futures exchange. Mm-hmm. And on the other side, they are very, very reluctant to open the gate for an ETF, for example, right? Mm-hmm. I mean, Spider ETFs exist since 30 years and they enjoy trillions of assets under management. Mm. Why is it so difficult, and what is the problem with enabling an ETF in the US? I really don't know. What I do know is that there are other market environments and other regulatory bodies very much looking into it. And if it's not the US who starts it, maybe it's in Switzerland or in Germany. I honestly cannot believe that it's going to take much longer until a fully fledged ETF is going to be available.
Yeah, well, and I guess we're just seeing other indications that the market demands or wants some of this stuff in an easy way. MicroStrategy has become a quasi ETF in its own right through the back door. And we're seeing, just on that subject, what shares, what crypto firms are going to soon be listed on major exchanges across the world and in the US. And I guess the big one that's being spoken about is Coinbase. Mm-hmm. Going to be IPOing. Most recent kind of indication of valuation, I think there was a private market trade on NASDAQ private markets indicating 100 billion valuation, people talking down beyond that. What's your thoughts on this? We saw PayPal as well acquire, or the rumors that they're looking to acquire Curve after having attempted to acquire BitGo, Custodian, Kraken reportedly, looking at their IPO opportunities, taking some investment, again, reportedly from the likes of Fidelity and GA. Anchorage raising from a sovereign wealth fund, it's all heading in this direction. The serious guys coming in, making these big investments. I mean, again, slightly more volatile, but there's a number of the listed Bitcoin mining stocks been very, very frothy recently, very volatile, but that interest is there. What does this tell you about what we're going to see over the next year in terms of market consolidation, IPOing, M&A?
There is going to be, I expect, beautiful days for M&A advisors to come. There will be a lot more of this kind of transactions. Look, at the end of the day, none of the big high street banks in London or Wall Street banks in New York, I'm not even talking about some of the European big names, but none of these guys are yet kind of really involved, right? So one day they're going to wake up and they have two options. Either they build it up from scratch, or they take a checkbook out of the traveler and say, okay, how much do you have to pay for something meaningful? Mm-hmm. I think it's a very healthy process. Coinsbase, 100 billion, is quite a number. Is actually quite a number. On the other side, if you look at evaluations of Ether, of Polkadot, of Celsius, of any of these guys, 100 billion is not the end of the world. I mean, it's a tremendous size business, right? I just actually, before I joined the call, I was attending another call as a visitor with Alex Webster from BitMEX, with Luke from Deribit, and with Sam from FTX, and we were debating, or they were debating, one of the hot topics you just addressed is how much do I move a big currency if I spend $1 billion? And the answer is not much. It is so outrageously liquid in the meanwhile. So you cannot say this is like a closed and shop run or ruled out by a bunch of individuals who making prices and moving the price according to their will. It's not. These days are over. It is so liquid, it's so big. You cannot move Bitcoin if you spend $500 million or $1 billion. It doesn't move, maybe on the 8th decimal, but it maybe a few pips, but nothing meaningful. So these investments, the company evaluations is only an output of a business that is going to be staying, is not going to run away simply because the price has hit a certain level. And what is important, all of these initiatives, PayPal with Curve, if it happens, Coinbase, Kraken, we always see it as a crypto play, but there's much more behind. This is the first part of a long journey because it's the easiest part. Is it like a currency journey? But if you add security tokens, initial digital offerings, tokenization of companies and corporates, this is something that's going to take from now a few years until it hits the market with liquidity, until banks and financial organizations have set up their internal workflows and core banking systems to operate with such a product. There are dozens, hundreds of proof of concepts, of sandboxes where companies are already testing, can I tokenize something? Can I sell it? Can I book it? How smart is my smart contract behind it? In case something matures, is the repayment done automatically? Is the right wallet credited with the right amount? So people are testing. This is not going to happen overnight. This is much more complex than crypto. But all these big names you've just mentioned, they're all positioning themselves in the space for the long run. Yeah. And crypto entry is only the easiest path in. Is probably not the end game.
Yeah, and the number of users that some of these platforms have already acquired. I mean, just looking at that from, if you're trying to, whether you're comparing it to traditional exchanges or to tech stocks, to have that captive audience with all this potential to come and all the additional services that could be provided to that audience. of those platforms is, I guess, what is inspiring some of these kind of larger numbers that are being bounded around, but maybe justified. We'll see. But for those guys, I guess, in these markets, with all the positivity and this sentiment generally, that this is potentially still just the beginning of a positive year for if these types of things continue. Then,
but look, Curve, for example, is a technology provider for storage of digital assets, right? So why would a company, and in this respect it was paper, but State Street, BNP Paribas Security Services, Citi Global Banking, JP Morgan, I mean, they all operate in the space of custodian services. They all need, at one point of time, they need to consider, do I build everything myself, or do I take something off the street available for an acceptable price, right? And the longer the wait, the more expensive it gets, I'm afraid to say. So either you start now building, or you better invest now, because it's not getting cheaper.
No, absolutely. And there's only so many options out there of people that have established themselves and built up their kind of level of trust required. Good. So just conscious of time, we're coming to the end. That's all the positive stuff. I guess it was probably a couple of weeks ago now, but just we've got to counterbalance these things. Don't get everyone too excited. If this positivity continues to filter through in the price, and we go from over $1 trillion of market cap to 5 trillion market cap, central bankers, Janet Yellen, Christine Lagarde, been making some negative noises over the last few weeks. Maybe some of what people might consider a bit boring, tried and tested and regurgitated stuff of Bitcoin being too energy intensive and a waste of energy. Are we just going to see more of that as they get more concerned as the market grows? And is that going to act as the counterweight to all of this?
I do not belong to the group of people who believe blockchain and digital assets and cryptocurrencies will replace central banks. I think this is an asset class. It has its value. It has its benefits. It has its risks. We are not going to replace the money market policy for Germany, Europe, Italy, France, or the US. The Fed will remain the Fed. But here's the big but. It doesn't surprise me if central bankers speak at least critical, not necessarily negative, about the crypto space. On the one side, I've never heard the president of the Association of Vegan and Vegetarian people talking bullish on beef, steak, meat. Why would they, right? That's the other side of the river. They are all working, every one of them, from the US over Europe into Asia. They're all working on central bank digital currency projects. They understood, all of them understood the benefit and the necessity of central bank digital currency. Now, is Bitcoin going to replace digital euro or digital dollars? Of course not. Of course not. Never, ever. But it is an asset class. Yeah, you cannot discuss it away. It simply sits there. And having the central bankers thinking about it and looking for solutions for their own central bank money and making payments instant, cheaper, faster, rather than fiat currently does, then that's an output of the business we are currently discussing here. Mm-hmm. Because if Libra would have not threatened the central bankers to replace them, at least in some parts of the world, they would never ever have considered digital currency as something meaningful and important to think about. Yeah. So what we see is an extraordinary change of mindset. And of course, and I cannot say I love cryptocurrencies and I think it's a great thing. It's them who approved CME futures. We're coming back to the previous point, right? So if they are so against it, why not closing down CME and saying you can't do this? Sorry, guys, this is bad news. No, it happens. It works. It operates. There is a world where both parties can live in peace together. Central bankers with their digital currencies, crypto issuers for their cryptos, DeFi coins for their service they provide. this is a new ecosystem to play in. And I guess the central bankers are currently exploring where exactly are their sweet spot in this ecosystem.
Yeah, no, I completely agree. It's net positive. They can coexist, and if it ultimately benefits everyone in payments and international payments, then no one will be complaining. Rupertus, we've eaten through our time. Thank you for joining us. We'll see you again next month, we'll see how this all pans out.
Thank you very much for your time, Paul. Appreciate it. Thank you. Thanks for having me.